Hello, everybody. It is the 4th of April, 2011. Welcome to today's Silver Log and Silver Analysis. The market currently trading near the highs of the day at $38.50. It's been stabilizing within that area for the last few hours or so, and we'll go over the daily chart, the hourly chart, look for some upside targets, and start off within the significant trend line that I've been following. And what I like about what I've been seeing is after it made a new high above the 38, it consolidated back down roughly around 4, 5%, 4.5%. And every day last week, it found support at this level. And it's a rising area. So to find support, it has to increase a little bit per day, thus keeping the uptrend alive. It successfully has done that and is now having a breakout candle. This is what that candle is. Usually, I don't know what the percent is, but it's pretty high that it's going to continue with higher gains over the next few days. And key support, obviously, previous resistance, that's a little bit below 38, as was this support resistance support. So that's something to look for on any retracements that may continue or may at some point definitely happen to come, which is a correction of some sort. If we continue on with trendline analysis, connect the same level of rate of ascension within the resistance point. That's an area of resistance that would be expected to show some significant top on this time frame, as well as this one. If you break through this one, you're going to here. If you find resistance here, I'd like to come back to here, and so on and so on. We're now going to switch this up to the 60-minute time frame. And I was stating on the blog on Friday or on YouTube on Friday about this failed move. Either we're going to have a failed move by having a quick fast break down to the 5-day moving average with a pierce below it, and then quickly recapture its losses and trade where it was before. This could often bring a failed move to a fast move to the upside. That has happened. And the failed move is pretty much guaranteed because either the down move is going to fail, which it did, or the rally from the move lower that brought it back towards this range and ended it in an upward trend was going to be a failed move. Thus, that would have probably made a move down towards this 38.2% Fibonacci retracement. And within the Fibonacci retracement, the lines have gotten a little bit bigger because it's now making new highs. This was the low from before, and what happened when you made a new high here, that made the calculations change for it, and thus we now have the Fibonacci at 36 and 3/4 or so, and expected to continue to go higher. Now the 5-day moving average, which was nice support here, I would expect it to have a nice lift off before it tests it. We might still correct a little bit through time or have a small price correction. What I mean by a small price correction is maybe a move back down to the 1-day moving average, maybe even the 2-day moving average, somewhere around here, as the expected support area before it starts to make new gains. Now, if that doesn't happen and the gains are small, because the old high was 38.16, so we've got up to 60 cents. That's a difference of about 1%. That's not that big of a gain. And if it's only a 2.5% gain, that would make me be a little cautious if support is unable to hold. But generally speaking, that usually means in a breakout like this that you would test some significant levels, which would be a break of the 40 level. We'll get to the price targets in just a little while, but before we do, just going to quickly go over some trend line analysis, draw a parallel line within the downtrend. The significant one would have been something like that. Therefore, it's now being used as a level of support, showing why it can have the nice little move towards the upside. And if it does break out, well, I'd be expecting it to match up somewhere within this trend in this area in here. Of course, that's not the same straight line. However, the same rate from top to bottom, I would expect for another possible high. Now, if we're using the numbers within Fibonacci, what I notice is a lot of times when you're breaking out that these numbers just coincidentally meet up with levels that line up so well with previous resistance. So therefore, I would expect this area to come probably at least to the lower end of this range right in here, if not even down to 37. So what I'll do is I'll find the price objectives if Fibonacci comes here or towards in here. And that would mean that this level would go up to here and somewhere a little bit higher. What we'll do is we'll use a Fibonacci calculator to figure out where this would take us towards, because this level here is roughly 3650 or 3660. I got the exact number in here. And we'll bring this up within the lows that we had before. It worked out that it was 36.34. Did that look right? Yeah, I guess it's below the 50. Within the 33.59 lows and the 38.16 highs. Now what's interesting here is if we take this 161.8% number, which is calculated from taking the difference of the high and this 38.2%, so it's going to give the exact same price target, which would match this number to here. So if I put 41.3 in here, you're going to see 36.34 go down to the 32. And there it is right there. So therefore, if this level here matches up with there, then we're going to $41.30. If we go by trial and error, just keep on putting numbers until this says 37, we can come up with just find a number that would work. It'd be over 43 by a little bit, probably about 43 and a quarter. So those would be the two numbers, 41.30 and 43 and a quarter. Though that would be the range I would expect this market to signify some sort of significant intermediate term top. And also, if we take a look at the Fibonacci again, at least using the top of 41.30, that would mean 38.16 and 39.33 are important. Now, what that means, at least for the 38.16, is that when it's all said and done, this area here is going to be major resistance. So most likely what would happen is that we'll continue to trade along here, probably a rally up to 39, even 38.50, and then come back. Whatever level we go towards, this is probably where it would come back, and even down towards 37.90, within that ballpark range, and that would signify that area to be that big of support. And in fact, where I would expect to go if we wanted to use exact numbers would probably be around 39.33 area, because the 76.4 would have significant resistance support. So the best guess I can make is a move up to 39 and a third, and then coming back down to 38 before it lifts off towards the 40 plus area. Thank you for watching this video, and have yourself a magnificent day. Take care.